Hey everyone. Today I just wanted to walk through a complete guide to charitable gifting. I've noticed a lot of clients tend to have bits of pieces of information here and there, and they know one thing and they're a little fuzzy on another. So I just wanted to put everything in one place, and so you can come back to this whenever you need a refresher on charitable gifting. So what I want to cover is who you can donate to, so like the charities you can donate to, what to keep on file for your taxes, how donations actually show up on your tax return, the difference between a tax credit and a tax deduction, and this one always trips people up, the limits of how much you can donate, what happens if you can't use all your credits in one year, should you and your spouse split up your credits, or should you claim them all in one turn? And then we'll wrap up just with a couple bigger picture thoughts at the end. So with that being said, let's get into it. Charitable gifting. So step one, make sure that whatever charity you're giving to is a registered charity. So most of the charities that people donate to are registered. The charities themselves understand this value of being able to give tax receipts to their donors. So most charities are registered, but it's not a given. Every once in a while, a client will tell me they've donated to some charity, and you look it up, and it's not actually a registered charity. It's usually not that big a deal, but doesn't mean that it's also not a worthwhile cause. It just means that you won't get a tax receipt for it. So if you're not sure whether the charity that you're donating to is registered or not, CRA has a public list of registered charities that you can search. Easy to check before you donate. It's also something that you can ask the charity itself, and if they are a registered charity, then giving that information to you is very easy for them to do. Number two, keep your receipts. This one's very simple, and it usually doesn't matter, but sometimes it does. So when you file your taxes, you don't actually attach your tax receipts. You just input the amount that you made in donations. Your tax preparer or accountant will obviously want those receipts to be given to them so that they know that, hey, what I'm putting in this tax return is accurate, but nothing physically actually goes to the CRA. That changes a little bit if CRA decides to review your return. If you claim $2,000 in donations and CRA asks for proof, you need to be able to produce that receipt from the charity. And as long as you can, you're fine. And if you can't, CRA is basically going to say, hey, you can't claim those credits. So hang on to your receipts. Doesn't matter whether you're old school and you like to do them in a shoebox, put them on your computer, wherever, give them to your spouse, whatever strategy works, keep them on hand just in case you need them. Number three is how donations are actually recorded on your tax return. So this is the part that I think a lot of people don't fully appreciate because there are two pieces to it. Sometimes I find myself even forgetting about it because as a financial planner, the learning material is heavy on the federal credit, but not so heavy on the provincial credit. And that's because the provincial credits are always different. So on your first $200 worth of donations, there's a federal credit for 15% of that donation amount. And then there's a provincial credit on top of that. For any donations in excess of $200, there's a federal credit of 29%. So it's way of a simple example. If you donate $200, your federal credit is $30, 15% of 200. If you donate $300, it's $30 on your first $200 of donations plus 29% of the next 100. So on that next 100, you're basically getting $29 plus the $30 on the first $200 of credit. So as your donation grows, more and more of your donation is being credited to you at a higher rate. Each province has its own credit in addition to the federal credit. So I'm in Ontario, so I'll just use Ontario for our example. In Ontario, you get an additional about 5% credit on your initial $200 donation, and anything in excess of $200, you're getting 11%. So when you stand back and look at the provincial and the federal credit together, on the first $200, you're basically getting 20% back, and anything above 200, you're getting close to 40% back, right? That's the part that people miss, I find, is the federal credit and the provincial credit, right? Most people understand that they're getting that federal credit, but sometimes people forget about the provincial credit. And the provincial credits are actually, there's some fairly big differences. Like Alberta, on the first $200 of donations, they give you a really, really high credit. It's actually higher on the first $200 than it is on anything in excess of $200. And that's, not the case in Ontario. So it depends on what province you're in for these credits. Now, everyone's favorite. I find everyone needs a bit of a reminder on this one. Got to hydrate for this. Tax credits versus tax deductions. This is the most common point of confusion. So we're going to break it down. Charitable donations allow you to claim a tax credit. They are not a tax deduction. Tax credit and a tax deduction are two different things. Tax deduction reduces your net income. So if you earn $100,000 and you contribute $10,000 to an RSP, for tax purposes, you're treated as if you earned $90,000 versus your $100,000 up here. But your employer on your paycheck withheld taxes based on this $100,000 figure. So when you file your taxes, you're typically going to get a refund, assuming that you've got not much of anything else going on. I think many people are familiar with that, and that's how a deduction works. It lowers your net income that you're actually taxed on. A tax credit works very differently. A tax credit has very little to do with your income. A tax credit is just used to pay the tax that you owe. I'm going to say that again. It is used to pay the tax that you already owe, right? A tax deduction changes the amount of tax you owe. Tax credit does not do that. Say you owe $5,000 in tax at the end of the year, and you got $5,000 worth of charitable credits. Those credits will cover the $5,000 that you owe, but they don't change the fact that you owe $5,000, right? And they don't turn into an extra refund or anything like that. They just cover the tax that you owe. The other thing that I've noticed is when clients are looking at their tax returns, they're like, okay, I get that it's a tax credit, but I donated $5,000 and I only see $2,000 of credits on my tax return. Well, again, this goes back to how the tax return is calculated. That $2,000 isn't the donation amount, it's the credit that the donation generated, right? So going back to Ontario, with the federal and provincial credits, anything in excess of that $200 is at basically 40%. So a $5,000 donation generating $2,000 of a credit makes perfect sense. That's how much you're actually able to offset on your tax return. Both numbers are correct. They're just measuring different things. So next, limits on what you can claim. The government's always funny. They introduce these rules and then they make them more complicated by adding limits to what you can actually claim. In any one given year, you can claim donations that make up to 75% of your income. For most people, this never comes up. It'd take a really large donation relative to your income to hit that ceiling. The only exception to that 75% limit is when you die. So on the year of death, that limit goes up to 100% of your net income. Most people will never really bump into those, but it's good to know just in case. The next thing is what happens if you can't use all your charitable donations. Charitable tax credits are what are called non-refundable tax credits. What that means in plain English and not finance speak is that you can use your tax credits to knock your income owing down to zero. So if you owe $5,000 in tax and you have $10,000 worth of charitable credits, you can wipe out the $5,000 of tax owing using your credits. But you can't use the additional $5,000 in credits to generate a refund. But those credits don't just vanish. You got two options to basically use these credits. So option one is you can carry them forward. CRA lets you carry forward any unused donation amounts for up to 5 years. So you keep track of the receipts, you only claim what you can use this year, and the rest sits there waiting. Next year, even if you don't donate anything new, you've still got the carry forward balance to use from the prior year. So many clients use this. If somebody makes a big one-time donation in a year, their income isn't quite high enough to absorb it all, we can claim part of it now, and you can claim part of it in a future year. And then option two is you can transfer those credits to a spouse. Charitable credits aren't tied to whose name is on the receipt. So if you've donated and you've already reduced your tax to zero, you can move some or all of the leftover credits onto your spouse's return, assuming that they still have tax owing. So the credits actually get used in the current year instead of waiting. There is one item here that I would just also mention. Because the charitable credit that you receive is different for different amounts of money, right? So on that first $200 in Ontario, for example, it's at a lower rate than on any amounts in excess of $200. It can typically be beneficial for one spouse to claim all of the credits. That said, if one spouse has already reduced their tax owing to zero, there's no advantage to claiming everything on their tax return because they're not able to use the credits. Another question that clients ask me is there an ideal time to donate? Short answer, timing matters less for charitable donations than it does for something like an RSP. With an RSP, you ideally want to contribute in your high income years because that tax deduction is worth more to you when your marginal tax rate is higher. The percentage you save scales up and down with your tax bracket. So making sure that you're properly utilizing your RSP in years where it makes sense to do so matters a lot. But charitable donations have fixed rates of a tax credit. It doesn't matter whether your income in a year is high or low. A dollar donated produces roughly the same credit so long as you can use those credits, right? You can carry charitable donations forward for 5 years. So if you're planning a one-time really big gift and your income is going to be very low after that, you might not be able to use the full credit even within the 5-year carry forward window. In a situation like that, sometimes it does make sense to time your donation a little bit more, spread it out over a few years instead of giving it all at once. But here's an important point whenever I say that. This is only relevant if you're optimizing the tax side. A lot of people donate to a charity or do a big one-time donation because the charity has a capital project happening or there's a specific need they want to support. And that's a totally valid reason to give now and just accept that you won't squeeze every last dollar out of the credit. This is personal preference, of course. So the big picture and the thing that I want to land on. You're never going to come ahead financially by giving to charity. In Ontario, you're getting roughly 40 cents back on the dollar. So if you're giving $10,000, you're going to get about $4,000 back at tax time, which means you're still out of pocket $6,000. No charitable donation in this regard is going to make you money. I bring that up because sometimes people think of charitable giving as a tax strategy. And I don't really think of it, as a tax strategy. A tax strategy in my mind is something that puts you in a better financial position, either immediately or at some point in the future. Charitable giving puts the charity in a better position. It doesn't necessarily put you in a better position, but you give because you want to give. The tax incentives are real, and if you're going to give anyway, you absolutely should make the most of them. The only one who loses out on this equation is CRA. The charity gets the same money, you get a bit back at tax time, and the lower out-of-pocket cost makes it easier for you to give to charity, which is exactly why these incentives exist. So that covered everything. There are actually some more technical details I didn't cover, but I will do in a separate video. So a couple things to recap. Make sure you're donating to a registered charity. Keep your receipts. Donations are a tax credit, not a tax deduction. If you've already forgotten the difference, go back up and watch it. And you give because you want to give. Thanks for watching, and talk soon.